Welcome, everyone, and thank you for joining today's in-depth discussion. If you're interested in the future of artificial intelligence, high-performance computing, next-generation data centers, and how these massive technological shifts are reshaping financial markets, then you're in the right place. Today's analysis is focused on Applied Digital Corporation, trading on the NASDAQ under the ticker symbol APLD. This video is designed to give you a clear, structured, and realistic understanding of the company's business model, financial position, growth potential, and the risks investors must consider as we look ahead toward 2026. Please note that this discussion is strictly for educational and informational purposes only and should not be considered financial or investment advice. Always do your own research and consult a qualified professional before making investment decisions. Applied Digital Corporation is a U.S.-based digital infrastructure company that has undergone a significant transformation over the past several years. The company originally built its foundation in the cryptocurrency mining space, specializing in the development and operation of large-scale data centers designed to host crypto mining equipment. During the peak years of crypto enthusiasm, this model generated attention and revenue, but it also exposed the company to extreme volatility tied to digital asset prices, regulatory uncertainty, and cyclical demand. Management recognized that while crypto mining helped establish the company's infrastructure expertise, it was not a sustainable long-term growth engine capable of delivering stable and predictable cash flows. This realization ultimately became the catalyst for a strategic pivot that has completely reshaped how the market views Applied Digital today. Over the last few years, Applied Digital has repositioned itself away from being primarily a crypto hosting company and toward becoming a high-performance computing and AI-focused data center operator. This pivot is arguably the most important development in the company's history. Rather than chasing short-term opportunities driven by speculative cycles, Applied Digital is now aligning itself with one of the most powerful and capital-intensive technological trends of our time: artificial intelligence. By shifting toward AI and HPC infrastructure, the company is attempting to embed itself into the backbone of the digital economy, where long-term demand is driven by enterprises, governments, cloud providers, and research institutions, rather than retail speculation. Today, Applied Digital's core strategy revolves around designing, building, and operating power-dense, GPU-optimized data centers capable of handling advanced artificial intelligence workloads. These facilities are not standard data centers. They are purpose-built environments designed to support AI training, large-scale machine learning models, cloud-based compute workloads, and enterprise-grade, high-performance computing applications. Such workloads require enormous electrical capacity, advanced cooling systems, and sophisticated operational expertise. As AI models grow larger and more complex, the infrastructure required to support them becomes increasingly specialized, and this is precisely where Applied Digital aims to compete. The importance of this positioning cannot be overstated. Artificial intelligence is not simply another software trend. It is a fundamental shift in how computing resources are consumed. Training modern AI models requires massive clusters of GPUs operating continuously for extended periods. This creates unprecedented demand for data centers that can deliver reliable power, consistent uptime, and efficient thermal management. Companies that can provide this infrastructure at scale are becoming strategically valuable, and Applied Digital is positioning itself as one of those providers. From a business model perspective, Applied Digital generates revenue primarily through long-term hosting and infrastructure leasing agreements. Rather than relying on short-term or spot pricing, which can be volatile and unpredictable, the company focuses on securing multi-year contracts with customers that require stable and consistent access to computing power. These agreements typically bundle charges for electricity usage, physical infrastructure, cooling, maintenance, and operational support. This structure is designed to provide predictable revenue streams and improved visibility into future cash flows, which is critical for a capital-intensive business like data center development. This shift in revenue model is financially significant. AI-focused data center contracts generally command far higher pricing per megawatt than traditional crypto hosting agreements. Crypto mining customers tend to be extremely cost-sensitive and often renegotiate or exit contracts during market downturns. In contrast, AI and enterprise clients prioritize reliability, performance, and scalability over marginal cost savings. As a result, these customers are often willing to sign longer contracts at higher rates, which improves margins and revenue stability for infrastructure providers like Applied Digital. Recent financial disclosures indicate that Applied Digital's annualized revenue run rate is approaching the $400 million to $500 million range, depending on capacity utilization and the timing of contract commencements. This represents a substantial increase compared to earlier periods and reflects the early success of the company's strategic pivot. As additional data center capacity comes online and utilization improves, revenue growth could accelerate further. Importantly, this growth is not merely theoretical. It is directly tied to the physical deployment of infrastructure and the signing of long-term customer agreements. The broader industry backdrop further strengthens the company's growth narrative. Artificial intelligence is widely regarded as one of the most capital-intensive technological revolutions in modern history. Training large language models, running inference workloads, and supporting AI-driven applications require enormous computational resources. Industry estimates suggest that global AI data center demand could grow at an annual rate of 20 to 30% over the next several years. If Applied Digital can capture even a modest share of this expanding market, the financial impact could be transformative. To put this into perspective, a single large-scale AI hosting contract can generate anywhere from $50 million to more than $150 million in annual revenue, depending on capacity, pricing, and service scope. If Applied Digital successfully signs multiple such contracts and executes its expansion plans on schedule, it is not unrealistic to envision the company reaching $800 million to $1 billion in annual revenue within the next few years. This potential upside is the primary reason why many market participants view APLD as a leverage play on AI infrastructure growth. However, this opportunity does not come without significant risk. One of the most critical concerns surrounding Applied Digital is its balance sheet. The company has relied heavily on debt financing to fund its aggressive data center expansion strategy. Estimates suggest that total debt obligations range from approximately $700 million to nearly $1 billion, depending on how various financing instruments are classified. In a high interest rate environment, this level of leverage introduces material financial risk. Annual interest expenses alone could fall in the $60 million to $90 million range, which places considerable pressure on cash flow. This means that Applied Digital must execute its growth strategy with precision. Data centers must be completed on time, customers must be onboarded efficiently, and utilization must ramp as expected. Any delays in construction, power delivery, or customer contracts could strain liquidity and force the company to seek additional financing under less favorable terms. Leverage, in this context, acts as a double-edged sword. If AI demand remains strong and Applied Digital achieves high utilization rates quickly, debt can significantly amplify returns for equity holders. Fixed costs are spread over a growing revenue base, margins improve, and investor confidence increases. On the other hand, if growth slows or capital markets tighten further, the same leverage could become a serious constraint, limiting strategic flexibility and increasing downside risk. The stock price behavior of Applied Digital reflects this dynamic risk-reward profile. Over the past few years, APLD has exhibited extreme volatility. The share price has traded as low as the $5 to $7 range during periods of pessimism and surged above $30 to $40 during peaks of AI-driven enthusiasm. This wide trading range underscores how sentiment-driven the stock can be. Market participants often react strongly to contract announcements, financing developments, and broader shifts in AI sentiment. APLD is frequently categorized as a narrative-driven stock, meaning its valuation is influenced as much by expectations and future potential as by current financial performance. Institutional investors may use the stock for tactical positioning, while long-term holders are typically those with strong conviction in the long-term growth of AI infrastructure. From a valuation standpoint, many analysts suggest that a fair trading range under normal operating conditions lies between $18 and $25. Sustained execution, improving margins, and reduced financial risk could justify higher valuations, while setbacks could quickly compress multiples. Looking ahead toward 2026, Applied Digital's future can be framed through three broad scenarios. In a bullish scenario, AI demand continues to exceed expectations, the company secures multiple long-term contracts, and utilization across its data centers approaches or exceeds 90%. Under these conditions, annual revenue could surpass $1 billion, operating margins would expand, and investor confidence would strengthen materially. In this case, the stock could reasonably trade in the $45 to $60 range by 2026. In a base case scenario, AI adoption continues at a steady but more measured pace. Some project delays may occur, but overall execution remains intact. Revenue grows into the $650 million to $800 million range, and the company successfully manages or refinances its debt without major disruption. Under this outcome, the stock may stabilize between $22 and $30, reflecting moderate growth balanced against ongoing financial risk. In a bearish scenario, high interest rates persist, customer onboarding is delayed, or capital markets become less accommodating. Under such circumstances, Applied Digital may be forced to raise additional capital through equity issuance or asset sales, resulting in shareholder dilution. If this scenario unfolds, and if market sentiment around AI cools simultaneously, the stock could decline toward the $8 to $12 range. Several key risks deserve emphasis. Execution risk is substantial as large-scale data center construction is complex, capital-intensive, and highly sensitive to delays. Power availability, regulatory approvals, supply chain constraints, and labor availability all represent potential bottlenecks. Equity dilution is another significant risk if cash flow does not turn positive quickly enough. Finally, macroeconomic and sentiment risk remains elevated, as AI enthusiasm has been a major driver of valuations across the sector. In conclusion, Applied Digital Corporation represents a high-risk, high-reward opportunity directly tied to the expansion of artificial intelligence infrastructure. The company has positioned itself within a strategically critical segment of the digital economy, offering significant long-term upside if execution is successful. At the same time, substantial financial leverage and operational complexity mean that downside 7 cannot be ignored. APLD is not a conservative investment. It is best suited for investors who understand volatility, can manage risk appropriately, and maintain a long-term perspective on AI-driven infrastructure growth. If you found this deep dive analysis helpful and informative, please consider liking this video, subscribing to the channel, and turning on notifications so you never miss our latest market insights. Also, let us know your thoughts in the comments below. Do you see Applied Digital as a long-term AI infrastructure winner, or do the risks outweigh the rewards? Thanks for watching, and we'll see you in the next video.